Most QuantMan users think the backtest page is just a scoreboard of their strategy because they have a quick glance at a profit, maybe a win rate, and that's it, they conclude. But what if I told you it's actually a gold mine filled with lots of insights? QuantMan's backtest result page provides in-depth analysis of your strategy. Not just how much it traded, but how it moved during a particular period when it stumbled and more. And that's why we have created this video to help you interpret QuantMan's backtest result page better. So without any delay, let's get into the video. Once you have created your strategy using QuantMan Strategy Creator, you will move into the backtest page after clicking the submit button. Within a moment, the backtest result page will load, revealing the efficiency of your strategy. The results you see on your page are not just numbers, they are full of report card broken down into 3 powerful sessions such as a run summary, transaction analysis, transaction order details. Let me explain each function one by one. First of all, you will see the gross P&L value, the transaction type, either historic, paper or automatic, the backtested time period, and the status of the backtest. Below this, the strategy's performance is visualized through an equity curve, showing how much profit evolved over time. The run summary session gives you a quick overview of how your strategy performed during the backtest. Here, you will see the winning probability, which indicates the likelihood of a trade being profitable, which is expressed in percentage. For example, a value of 70% suggests that approximately 70 out of every 100 trades generated a profit, providing a measure of strategy's overall success rate. And there is the win-loss ratio. This takes the total number of trades and split it up into winning trades to losing trades. If you had a total of 100 trades, comparing of 70 winning trades and 30 losing trades, your win-loss ratio is 70 to 30. The next is risk per trade. The risk per trade is consolidated parameter that summarizes the potential risk and reward characteristics of a strategy. This is calculated using the Kiley criterion. It typically ranges from 0 to 5%. An RPT above 1% is generally preferable, with higher values indicating the stronger potential performance of the strategy. The next one is drawdown. Drawdown measures how much your portfolio falls from the previous peak value during a decline. It shows the temporary loss experienced before the portfolio recovers to a new high. It helps you to understand the risk and volatility of a strategy, how deep the drops can get during the bad periods. While drawdown tells us how much the portfolio has fallen from the peak at any point. Maximum drawdown focuses on the deepest of those declines. Max drawdown is the biggest loss seen from the highest value of your portfolio to the lowest point before it reaches a new high. Let me tell you with an example. If your portfolio reached a high of 2500 and then fell to minus 1500, the maximum drawdown would be 4000. So you can understand the worst case loss that your strategy might face. Drawdown days indicates the number of days over which the maximum drawdown occurred, showing the duration of the largest decline in the portfolio during the backtested period. Following it, you will see the average profit and average loss. It displays the average profit or loss you earned from each trade. This means that if the average profit is 2200 according to the backtest, each trade you earned an average profit of 2200. Coming up is the win and loss streak. It displays consecutive trades that were profitable versus those resulted in a loss. For instance, your strategy has 7 winning trades in a row. Your winning streak is 7. If it has 4 losses in a row, your losing streak is 4. The next one is max profit. It reveals the highest profit earned in one transaction during the backtested time period. Max loss reveals the largest loss incurred in a single trade during the backtested time period. Now, let's move to the second session, the transaction analytics tab. This session helps you see your strategy worked with different instruments, trade types, days, years by showing the number of hits, misses, as well as the profit and loss values. First comes the instrument. The instrument-wise split provides a detailed breakdown of each instrument used within a multiple instrument strategy. It shows the hit and miss count along with the profit and loss for every instrument, helping you evaluate the individual performance of a particular instrument. The next is trade type. The trade type session tells you what kind of trades were executed. For example, call option long in a multi-leg strategy. This breakdown also provides a leg-wise split of each transaction, allowing you to analyze the contribution and behavior of the individual leg. And then there is the day of the week. This shows your strategy performed on each day of the week for the backtested time period. For each day, you can see the number of hits and misses and the gross profit and loss amount. You will also see the performance by year, where it displays year-wise split up of a multi-year backtested and how many trades were won and lost each year. The monthly P&L heat maps provides a visual summary of your strategy's profit and loss on month-by-month basis. It helps you quickly identify recurring patterns, strong and weak months, and overall consistency of the performance across different market conditions. Now let's go to the last part, the transaction order details tab. This part shows all the trades your strategy made during the backtest. You can pick how many trades to see at once, such as 10, 15, 20 trades per page. This session provides a detailed view of each trade, including the instrument traded, example Nifty, Bank Nifty, Fin Nifty, the contract details and the lot size. It also shows the entry and exit time and price, the profit or losses for the trade and its impact on the cumulative profit and loss. In addition to this, you can find some options above the equity curve, such as filter by, slippage and instrument. These mainly help you apply filters to your strategy so you can analyze it more deeply. The filter by option helps you narrow down the backtest results. You can use the days of the week filter to filter the trades based on the weekdays, or DTE filter to filter based on the DTE. You can also use the case-wise and leg-wise filters. Slippage happens when the price at which the trade is done is different from the expected price. This often occurs because of the market changes. Hence, you can manually enter the estimated slippage value and see its effect on the backtest result. Next time, your backtest doesn't just focus on the profit. Dive into the details because the result page is a performance tab for your strategy. Now that you know what to look for, revisit your past backtest, spot the patterns and build sharper strategies. If you found this useful, check out our other tutorials. Ready to evaluate your strategy? Head back to QuantMan and explore your strategies like never before.
Trading and investing involve substantial risk and are not suitable for every investor.